What if I told you that some of the most successful companies in the world, like Amazon, Microsoft, and even Tesla, have a tangible value per share that's shockingly low? Numbers so small, you'd wonder how these companies are worth trillions in the stock market. But here's the kicker. That tiny number is actually net tangible assets per share, or NTAPS. It strips a company down to its bare bones. No hype, no brand value, no patents, just hard assets and debts. Understanding NTAPS can give you an edge in spotting undervalued gems or avoiding overpriced traps. By the end of this video, you'll not only learn how to calculate NTAPS, but also how to use it to make smarter and more confident investment decisions. All right, so what is NTAPS? It's the per share value of a company's tangible assets if it were liquidated today. Think of it as stripping away everything intangible: brand value, patents, goodwill, and focusing on the hard numbers. NTAPS is tangible assets minus liabilities divided by the number of outstanding shares. Let's bring it to life with a real-world example. Take a closer look at Amazon in 2023. The company reported total assets amounting to $462.7 billion, demonstrating its massive scale and substantial resource base. Within this, intangible assets, things like patents, trademarks, and goodwill, were valued at $4.65 billion, a relatively small portion of its total assets. On the other side of the balance sheet, Amazon had total liabilities of $285.2 billion, reflecting its significant obligations, including debts and operational liabilities. Lastly, the company had 10.24 billion shares outstanding, a key figure for evaluating its market valuation and per share metrics. These numbers together paint a picture of Amazon's financial position during the year. Specifically, we calculate 462 billion minus 4.65 billion minus 285.2 billion divided by 10.24 billion. This gives us a result of $16.88 per share, reflecting the net tangible value of Amazon on a per share basis. So if Amazon were to sell off all its tangible assets and pay off all its debts, you would pay this price. But as you know, Amazon's stock price is much higher. Why? Because investors are betting big on its future growth, brand value, and innovation, things NTAPS doesn't measure. Now here's where it gets interesting. NTAPS isn't a one-size-fits-all number. It varies across industries. Let me give you some quick examples. In manufacturing, a company like Caterpillar had an NTAPS of $37.77 in 2023. That's because manufacturing relies heavily on physical assets like machinery and facilities. In tech, Microsoft's NTAPS was $16.14. Lower, right? That's because tech companies rely on things like intellectual property and innovation, which aren't factored into NTAPS. In finance, JP Morgan Chase had a massive $94.73 NTAPS in 2023. Why? Banks deal with massive asset bases, so NTAPS tends to be much higher in this sector. The key takeaway? Context matters. NTAPS is most useful when you're comparing companies within the same industry or evaluating a single company's performance over time. How can NTAPS actually help you as a long-term investor? Let's break it down. First, it can help you spot value opportunities. By comparing NTAPS across companies in the same sector, you might uncover hidden bargains that others have overlooked. Second, it's a great tool for tracking financial health. NTAPS shows whether a company's tangible value is growing or shrinking over time, which can be a big indicator of its underlying stability. And finally, it's a way to measure management efficiency. A consistently rising NTAPS often points to smart asset management, which is something every investor wants to see. To wrap it up, think of NTAPS like this. It's your baseline, your starting point. It tells you the tangible worth of a company, but not the whole story. So, the next time you're evaluating a potential investment, don't just stop at the price tag. Dive deeper. Calculate the NTAPS. Use it to uncover hidden value and maybe even spot your next big opportunity. Want to dive deeper? Check out the latest post on Jiro's blog, where we unpack NTAPS with advanced tips and examples from industry leaders. The link's in the description.